Hey everyone, welcome back to Corporate Decoder. Today LOKVU just filed an amended 8-day reporting on a business combination hinting at significant strategic shifts, and I've spotted a crucial detail about their forward-looking statements. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is essentially an update to a previous report, with the main event being the filing of a revised investor presentation, and it's this presentation and the terms of the business combination that we really need to unpack. So, Live Oak Acquisition Corp V, which trades under the tickers LOKVU for units, LOK for shares, and LOKVW for warrants, is filing an amendment to a previous report. The reason for this amendment is to provide a revised investor presentation. This presentation is all about their upcoming business combination with a company called Teamshares Incorporated. Think of a SPAC or a special purpose acquisition company, like Live Oak looking to merge with a private company, Teamshares, to take it public. The earliest reported event here is the 31st of March 2026. This is an amended report, meaning they are updating or correcting information from a prior filing. The core of this update is the inclusion of an investor presentation which has been revised. This presentation is designed to give investors a clearer picture of the business combination, which is essentially the merger between Live Oak Acquisition Corp V and Teamshares. Let's quickly touch on what Live Oak Acquisition Corp V has listed on the stock exchange. They have units, which are packages of one Class A ordinary share and half a redeemable warrant, all trading under the symbol LOKVU. Then there are the Class A ordinary shares themselves, trading as LOKV. And finally, the warrants, which give holders the right to buy a Class A ordinary share at a specific price, trading under LOKVW. All of these are listed on the Nasdaq stock market, LLC. The company is also checking the box that they are an emerging growth company. This designation comes with certain regulatory benefits, like being able to phase in new accounting standards over a longer period. It indicates that they are likely a relatively newer company or a company that hasn't reached a certain size yet. They are also indicating that they are opting out of the extended transition period for adopting new or revised financial accounting standards. This means they will be following the latest accounting rules as they are released, just like larger, more established companies. Now, the real meat of this filing falls under item 7.01, which is about Regulation FD disclosure. Regulation FD, or fair disclosure, is all about making sure that when a company releases material information, it's done in a way that reaches all investors at the same time, preventing insider advantages. In this case, Live Oak is filing this amended report to formally present a revised investor presentation. This presentation prepared by Teamshares is tied to their merger agreement, which was initially signed back in November of 2025 and has since been amended. This investor presentation is the key document here. It is being provided in lieu of the original presentation that was attached to a previous report. So they are basically saying, here is the new and improved version of the information about the deal. This presentation is intended to be used by both Live Oak and Teamshares to help explain the business combination to potential investors, stakeholders, and the public. It is important to note that this presentation is being furnished, not filed, meaning it is being provided to the SEC for public access, but it doesn't carry the same legal weight as a formal filing. This is pretty standard for investor presentations in the context of mergers and acquisitions. The filing then goes into a section about additional information and where to find it. This is a pretty standard disclosure for companies involved in mergers and acquisitions. They mentioned that they filed a registration statement on Form S-4. With the SEC, this document is crucial because it includes a proxy statement for Live Oak shareholders and a prospectus for the securities that will be issued as part of the business combination. Once this registration statement is declared effective by the SEC, shareholders will receive the definitive proxy statement and prospectus, which will contain all the vital details about the merger. They are urging everyone to read these documents carefully once they become available, and also mentioning that copies can be found on the SEC's website. This is all about transparency and making sure investors have the information they need to make informed decisions. This is a really strong warning to shareholders. They are emphatically stating that before anyone makes a decision on voting for this business combination, they absolutely must read the registration statement, the proxy statement, and any other related documents filed with the SEC. This is legally important because it puts investors on notice that they are responsible for their own due diligence and that all the necessary information will be made available to them. It's essentially saying, don't say we didn't tell you and don't vote without knowing the full story. This part talks about who might be considered participants in the solicitation of proxies. In plain English, this means the people who might be influencing how Live Oak shareholders vote on this deal. This includes Live Oak's and Teamshares directors, executives, and other employees. The filing assures that more details about these individuals and their potential interests will be disclosed in the proxy statement. It's a way to ensure that any potential conflicts of interest are transparent to shareholders. This is another important legal disclaimer. They are clarifying that this report itself is not a proxy statement or an attempt to solicit votes or proxies. It is also not an offer to sell or buy any securities. This is a common statement to make sure that the filing doesn't inadvertently trigger regulations related to public offerings or solicitations. They are basically saying this report is for informational purposes, not to push you to buy or sell anything or vote a certain way right now. Now, this section is vital, and it is where I spotted a potential red flag. The filing contains forward-looking statements. These are basically predictions or expectations about the future. They are identified by words like believe, project, expect, anticipate, and will, among others. The critical part here is that the filing explicitly states that the actual results might be very different from these expectations. It's a standard disclaimer, but it's also a reminder that these are just hopes and plans, not guarantees. This is where it gets interesting. They list out a whole bunch of potential problems or risks that could prevent the business combination from happening or affect its success. Things like the risk of the merger agreement being terminated, legal challenges, failure to get shareholder approval, not being able to list on Nasdaq after the merger, or even Teamshares failing to implement its business plans post. Merger. It's a comprehensive list of what could go wrong. And here is the kicker. They explicitly state that the list of potential problems they just laid out is not exhaustive. This means there could be other unlisted risks that could impact the future of this company and the business combination. For investors, this is a significant signal when a company says things might not go as planned and then tells you that the list of potential problems isn't even complete. It suggests a high degree of uncertainty. Finally, under item 9.01, we have the exhibits. The main exhibit here is exhibit 99.1, which is the updated Teamshares investor presentation. This is the core document that this amended report is providing to the public. There is also exhibit 104, which is the cover page interactive data file, common for SEC filings now, making them easier to process digitally. So what is the story here? Live Oak Acquisition Corp V is moving forward with its merger with Teamshares. The amended filing is primarily an update to share a revised investor presentation. While the presentation itself is not included in a way that we can analyze its specific financial projections, the surrounding text is very telling, the emphasis on forward-looking statements, and the explicit acknowledgement that the list of potential risks is not exhaustive, paint a picture of significant uncertainty. It's a lot of cautious language, which, while standard legal practice, can signal that the path ahead, even if the merger goes through, might be bumpy. When a company is filing an amended report right before a major deal, and the forward-looking statements section is so heavily qualified, it warrants a closer look at the fine print in that investor presentation and the underlying financials of Teamshares, which we don't have in this particular filing. What I am actually looking for is the actual financial data within that investor presentation, and to see if the risks mentioned in the general text are reflected in Teamshares' actual performance and projections. That is my take. Stay decoded. If you found this analysis on Live Oak Acquisition Corp V helpful, please hit that like button and subscribe for more. And join our community Discord linked in the description.